Good afternoon to those of you that have joined us today for our webinar on management during a pandemic, HR and cash flows. My name is Mary and I'll be your moderator today. If you have any questions throughout the webinar, feel free to message in the chat box. To open the chat box, you can click on the chat icon at the bottom of the screen and it will open the chat box. If you have any technical difficulties throughout the session, feel free to message me by clicking on the drop-down and clicking all panelists, or by simply raising your hand and clicking on the raise hand button. We will open the floor to questions at the end of the presentation, but we encourage you to ask questions as we go along. Ask a question by clicking on the Q&A icon and typing your question in the Q&A box. If the presentation screen happens to be too small, you can enlarge it by clicking on the line and dragging it to the right. It will then look like this. Our presenters for today are Dana Gidge and Peter Niemeier. Without further ado, I will pass it over to them.
I just want to quickly go through the agenda of what I'm going to review. So I'm going to be talking a bit about government subsidies, as well as then talk about cash flow management techniques and strategies. And then following my presentation, we'll go through a Q&A with you. And if you have any questions, we'll be able to answer them then. So I will now transition to talking a bit about tax filing extensions, review quickly what are the filing deadline extensions for self-employed individuals, corporations, and then if there's a balance owing, what are the CRA interest rates and what payment plans or options are available with CRA, as well as maybe a strategy to use CRA to help finance you over a period of time. So I'll talk about that in a second. Starting off with self-employed individuals, so the filing deadline for personal tax returns, as well as any individual who has a self-employed business statement, was June 15th, 2020. However, the tax payment deadline for the 2019 year was extended to September 1st, 2020. So this applies to all balances owing, as well as installment payments for the next period. So that would have been the June period, I believe, is extended to September 1st, followed by a September 15th installment period. So in situations where an individual has filed after the filing deadline, they are still able to make a payment before September 1st, and the CRA has said administratively that they will not charge any penalty or interest on late filing. So that's good news from a cash flow standpoint for individuals that won't be affected by penalties, as well as the additional deadline to make that payment is also very beneficial. So for corporations, their filing deadlines for, these are year ends for November 2019 to February 2020, have been extended to September 1st. Tax payment deadlines have also been extended to match that for those exact same year ends, also to September 1st, 2020. So this really applies to all balances owing and installment payments as well for the corporation. So definitely some cash flow relief for companies that don't have to worry about making those payments after. And now just talk a little bit about what happens if you don't make those tax payments and what will CRA charge you. So on a quarterly basis, the CRA will publish the amount of interest that's charged on overdue balances, and that has decreased now to 5% effective for the quarter July 1st, 2020 to September 30th, 2020. Going forward, CRA will publish again what the next rate would be, but I would expect it's probably going to stay at about 5%. And now just a planning area that someone could consider. It's not always the best plan and definitely should be considered in conjunction with other financing plans, but the CRA can act a little bit like a lender as well. So given that 5% effective rate on interest that they charge, maybe it's actually a lower interest rate than you would be paying on other sorts of lending. So maybe actually having a balance owing with the CRA could be a planning method to have some more cash effective lending in a company. The CRA will also allow you often to set up a installment payment plan in order to repay any balances owing. So that could be a consideration to spread a balance that's owing over 5 to 6 months in conjunction with approval with the CRA. But do keep in mind, just as a caution, that the director's liability for unpaid CRA balances hasn't changed, and that those balances will need to be paid eventually. And you definitely want a plan set up with the CRA in order to make sure that they're not freezing accounts or garnishing money. And now just to talk a bit about the CERB benefit. So some of these benefits you've already heard about. They've been in place for a couple months. Why I'm talking about them again, there's been some recent changes to a lot of these, so I do want to highlight what those changes are, not go through all of the criteria again because you've probably learned about them over the last couple months. And if you do want some more information, the government website's actually really good at listing who has the eligibility requirements for these benefits and loans, as well as all of that. All those resources are listed online. But quickly again, some of these changes I'll go over. So the CERB benefit is that $500 per week or $2,000 monthly taxable benefit that's provided to individuals without work. So the big change is that it's now taxable, as well as it's been extended to 24 weeks for eligible workers who stopped working. So the eligibility requirements have also changed recently. So who's eligible? It's individuals who have had employment, which now includes dividends or self-employment income of at least $5,000 in 2019 or in the last 12 months prior to the date of their application. Why this is actually important is that the 12-month period might actually change whether or not you meet the requirement. So it's certainly possible that maybe you didn't meet the requirements in March, but now that it's July, you may meet the requirements and can actually apply for the CERB benefit. So individuals who are also, they can't quit their job in order to qualify for this benefit. So it has to be basically due to COVID or a temporary layoff, which would allow individuals to apply for this particular benefit. So when submitting the first claim, the individual can't have earned more than $1,000 in employment or self-employment income in the last 14 days. And then when submitting subsequent claims, you can't have earned more than $1,000 of employment or self-employment income in the last 4-week period. So there is many examples where individuals can be working part-time or with reduced hours and still claim the CERB benefit on top of that. So from a cash flow standpoint, even individuals who aren't employed or aren't as utilized as highly in their employment can still have these cash flow alternatives and benefits that the government has. Do keep in mind, it's a taxable benefit and the government hasn't reduced any taxes on this income that's being given. So come tax time next year, it might be a bit of a rude surprise that you might owe money when previously you've never owed money before when filing your taxes. If, for instance, you're in a situation where this benefit is more or equivalent to what you've been earning before. So I did also want to talk about the CEBA loan. This is the $40,000 interest-free, partially forgivable loan in order to help small businesses cover their operating costs. So the criteria for this loan have recently changed again at the end of June. So the loan criteria has been expanded to now include small businesses that didn't have any payroll. Previously, there was the $20,000 of T4 employment income requirement. It also now applies to anyone who's a sole proprietor who receives either business income directly that's reported on their personal tax return, or a family corporation, again, that is using dividends as a way of remunerating their owners. So applicants without at least $20,000 of payroll in 2019 now do have some additional criteria that they have to demonstrate in order to apply for these loans. So the criteria, the primary one is non-deferrable expenses of between $40,000 and $1.5 million in 2020. So the loan is applied through a financial institution at the bank, and now additional criteria such as either projections or copies of invoices and receipts will have to be provided in order for people to be approved for the $40,000 interest-free loan. So the government doesn't want a situation where it's someone who is operating a business where they don't have more than $40,000 of expenses. In an annual basis, they're not going to be extending that loan to those individual businesses. So really it's on a needs basis. So eligible non-deferrable expenses and their categories are now listed on the CEBA website. So I've just linked it there. You can also do a quick Google search and that should bring up those options. So non-deferrable expenses could look like something like rent payments for the business, certain utilities, as well as principal payments on regularly scheduled debt payments. Also, non-deferrable agreements that have been signed where there's an obligation for the business. Other things would be costs to maintain licenses or operating status of businesses, which I believe would also include your annual accounting fees. So another big change, and this is all based off of proposed legislation, is for the wage subsidy. There's going to be some really big changes that were announced July 17th. Again, it is proposed legislation, so the actual draft legislation, once it's approved, may look a little different, but this is what has been communicated, and I do think from a cash flow standpoint, very important for employers to know how this new program is going to work and what the impacts on them are, especially as you're budgeting or preparing for employees to return to work under phase 3. So the new qualification periods, there's 6 new periods that'll extend until basically, well, from June to November 2020. And so I'm going to highlight now some of the key points related to these proposed changes so that individuals and business owners can start planning ahead of time for what the impacts will be to their business. So employers with a higher percentage of revenue reduction now could be eligible for increased subsidies. So the prior rule was that if you had a 30% revenue reduction, then you would be eligible blanketly for the 75% wage subsidy. Now it's kind of on a sliding scale where people who have been proportionally affected more could stand to now get a higher subsidy. So that's good news for businesses that have been hit harder by COVID. And now employers who have under 50%, presumably to again maybe 30% or some other qualification criteria, they're going to be on a sliding scale, have their benefit reduced. So again, it's more targeted towards businesses who need the additional wage subsidies, which probably will be good. It depends. I don't know if it's going to reduce the existing subsidies for individuals between or businesses between 50 and 30%, but we will see when the final legislation gets passed. So regardless of revenue reductions, a factor is going to be applied also to phase out the subsidy for employers during the new qualification period. So again, it's going to go to November. So it'll be interesting to see. It looks like the subsidy will be reduced over time, and we'll see if that ends up actually still staying once the legislation is finalized. Again, I do believe that no matter what, based off of how the economy responds to the phase 3, as well as if there's another outbreak, all of the policies are fluctuating and can change based off of the ebbs and flows of whether another lockdown occurs. So I think that the government will still continue to be responsive to the economic environment as well as the environment with COVID and lockdown. So the government has also said that a different deeming rule will be put in place to deem a revenue reduction to be at least the same or different from the prior month. So you'll remember, based on the old rules, if you qualify for one period, then you also qualify for the subsequent period, regardless of whether or not you met the qualification criteria. So the government hasn't said what the new deeming rules will be. They've just said that the deeming rules will probably change now that they've expanded the criteria for the wage subsidies. So keep that in mind. Additional information will be available hopefully within the coming days and weeks. So the qualification periods from July 5th onward would also not have restrictions regarding employees that haven't been paid within 14 consecutive days. So that's also important to know that there's going to be some changes there. So I do also want to talk a bit about the CECRA, which is the Canada Emergency Commercial Rent Assistance. I've been reading some information online in terms of how successful this program and benefit has been, and it sounds like there's been a lot of challenges that the government has seen administering some of the relief money. The main reason for these challenges is that it's not something that can be applied independent of cooperation between a commercial tenant as well as their landlord. So the way that this benefit works is that property owners would receive 25% less rent, and the business would be able to pay 75% less rent to their landlords. So cooperation is necessary for the grant application, and there has to be mutual consent because there is a component of forgiveness of rent between it. So the nuts and bolts of how this rent assistance works is that the tenant would pay 25%, the government would put in 50%, and 25% would be forgiven by the landlord. So the qualification criteria for impacted small businesses are that they can't have rent of more than $50,000 on a monthly basis. They also won't generate more than $20 million annually in gross annual revenues. They also have experienced a decline of at least 70% revenue reduction in COVID. So the cooperation between the landlord and the tenants is really important in submitting all of those documents and proving that the small business meets those criteria. Again, it hasn't been as successful as I think the government would have liked, so it's possible that some of the criteria might get changed in the coming weeks and months in order to make it expanded, in order for more people to qualify for it. So just a reminder also that support is retroactive to April 1st, 2020, and the deadline for new applicants is August 31st, 2020. If you've already applied, the deadline for the July extension has now been moved to September 14th, 2020. So again, it sounds like this hasn't been really utilized as much as the government wants, but the application is still open till August, so people can go back to April 1st. So it's worth having a conversation with your landlords if they haven't voluntarily agreed to some other sort of plan to provide rent assistance. A question that we actually usually get is, will the program extend beyond July if public health measures remain in effect? So the government, as I've seen, hasn't come up with any definitive response yet on whether they plan to extend the SECRA. Again, I think with phase 3, maybe they're thinking it may not be applicable. Maybe it will still be applicable to people who meet the 75% or 70% decline in revenues. So it does remain to be seen whether they continue extending it the way it currently is worded, or if they make changes. But again, no definitive government ruling. Stay tuned. Hopefully within the next few weeks, they should come out with something in order to provide additional information to small businesses. Now, I also just wanted to talk a bit about some government funding that's being administered by one of the government working partners, which is the Business Development Bank of Canada. So the BDC is an extension of government, and they often work in conjunction with the banks in order to make small business loans. But aside from the banks, if you don't qualify, they have different criteria. You may qualify for a loan with the BDC. Traditionally, in the ordering of which lenders provide the best rates, the BDC, although they often provided more flexibility than the chartered banks, would often have an interest rate that would be higher than what the banks would have. But now the BDC has been empowered, as well as their rates have recently changed as well, to provide loans to a lot more businesses than maybe had previously been considered under their applications, as well as to work with either a co-lending program with the chartered financial banks, or to provide direct funding directly to small businesses as they've previously done, but now under some really favorable terms. So there's two different types of loans and different criteria in terms of what the rates would be on these loans. So I checked with my go-to person at the BDC, one of their account managers, just to get some updated information because it's changed recently as well. So any amount that is being loaned at less than 100,000, those loans can be done with a BDC advisor as well as online. They're going to have amortization periods of 60 months, with the first 12 months being interest only. So no principal repayments are required for the first 12 months, which provides great flexibility to business owners, especially those who've been impacted by COVID, and a really super attractive lending rate at 2.8%. So that might be competitive or better than the chartered banks right now. So it's definitely worth looking into if you're looking for a loan, to know that these alternatives are available. For both of these loans, security that's required is a personal guarantee, as well as a GSA signed by the business. And the owner would then also have to give that personal guarantee. So on amounts greater than 100,000, amortization is the exact same, 60 months, first 12 months interest only. The rate's a bit higher, so it's 4.55%, and the security would be the same, personal guarantee and GSA. So that's a great alternative for people who are looking for financing options, as well as cash flow management. Is just to know that there is funding available outside of your business and outside of the banks, and that the BDC is a good alternative. If you want to contact your RLB advisor, we'd be happy to put you in touch with one of our colleagues at the BDC. So the second part of my presentation is just to talk a bit about cash management techniques. And I just want to highlight a couple different things for you, and then go through a list of some cash management techniques that I think are applicable, especially in this current environment, and would just be general in nature, hopefully applicable to a lot of the people attending the session. So the first thing would just be to ensure and develop an understanding of what your current financial position is, as well as what your projected financial position would be in the future. So especially as phase 3 is going to be coming into play, a lot of your cash requirements are probably changing or in flux, and really you need to do some modeling to see what your cash flows and future cash flows look like and develop a plan to really manage and stress test what your operations need to look like in order to meet your business goals as well as to have cash to remunerate employees and the owner of well for the business. So some general kind of things would be to create a rolling 3-month cash flow statement, really focus it on the income and expenses and keep this updated and regularly review it as things are progressing, as the phase 3 happens, and track really what your cash position looks like. If it's a position where you're still having reduced income but similar operating expenses, then you need to look at your burn rate of cash. How long are you able to maintain operations at that current rate? Do you need to look at financing alternatives? Do you need to look at any personal cash injections? And really, what are the consequences of that? How long can the business operate, and how can you turn around the cash flow side of things? So highly recommend creating a cash flow forecast for 6 months, 12 months, as well as do some stress tests. Look at if income increases by 15% or if it decreases by 15%, what position does that leave your business in? One of the best ways of monitoring cash is also always just to look at your bank. Look at the ending balance in your bank from the previous month versus the current month, and that also gives you a pretty good understanding of how much cash is being burned or accumulated by the business. It's not an exact science because, of course, your accounts payable and accounts receivable isn't factored into that, but I just do think it's important if you don't have those really developed financial projections, that you're able to just cue in and have something that'll tell you how your business is doing. So some cash management techniques that I'm going to cover in a little more detail would be a detailed cost analysis, managing your accounts receivable and collections, managing your accounts payable and payments, managing your inventory, also understanding what your business interruption insurance looks like. There's been some new changes in that aspect as well, so maybe you do qualify for some relief from insurance, as well as I talked a bit about those government programs and benefits and subsidies, so taking advantage of those for your business when you're eligible to, as well as looking at financing options. Again, I talked a bit about the BDC, but I'll just expand on that a little bit. So a list of some suggestions and just some general ideas could be prioritize spending based on your operational requirements for the business. So what that basically means is that, what are those spending that you need for that business to operate? Those will be your variable costs, any fixed costs that you have, those categorizations, and just an overall understanding of what's your margin on your operations. Do a break-even analysis, see how many units do I need to spend, or how many units do I need to sell in order to break even and meet my goals, as well as what's the time requirement from you operating the business. Because COVID has changed so many things, maybe hours have also been affected, and employing and fully utilizing employees is also now impacted. So having a good understanding of how many units do I need to sell, or how much margin do I need in order to support my workforce, as well as to support break-even calculation. So understanding also what costs you can stop and what are some discretionary expenditures. So the classic example is someone who has a fleet of vehicles, and maybe they're involved in construction unfortunately, oftentimes when the money's not coming in, what they do is they stop preventative maintenance. So I'd be looking at more things like understanding what are some discretionary costs that aren't necessary. So if the business isn't operating and your doors are closed, do you need to continue marketing efforts? Should you still continue advertising on social media, or is this an opportunity to, maybe save the money until the business is actually operating again? And conversely, maybe you should be spending, now that your business is back open, informing and telling people that, we're back in business, our doors are open, and you can resume regular business activities. Maybe now's the time to spend. Looking at also things like meals and entertainment, as well as discretionary entertainment expenses, non-essential purchases, or kind of, fringe type things. So maybe you were considering upgrades of your computer system. Maybe now, instead of doing the upgrade this year, you push it back at a time where cash flow is more stable and operations return to normal. One other thing that you could consider is encouraging employees to take available leaves, as well as, take their vacation now when you're not operating. as well as if you have employees who are on contract basis and their earnings are determined on their hourly basis. Maybe it's redistributing work back to full-time employees that aren't being fully utilized and ending certain contracts. That's, again, from what Dana said, just in a way that doesn't involve any employment litigation costs associated with that. Also, try and redistribute maybe work that you've been doing as the owner. If your employees aren't fully utilized, give them an opportunity to take on some more of the burden and maybe challenge them into learning some new aspects of the business. As the owner, you often want to focus on, getting work back to where it is. And if employees can take on some of the additional burden of some of those other operating expenses, it's a good time to now maybe start passing off those responsibilities. You also maybe want to consider whether there's any capital expenditures that can be delayed or any deposits that can be returned. So I know like hydro, for instance, would take a deposit if it hasn't been returned to you. Maybe you should reach out and ask. If there's any tenders that maybe won't be happening or have been delayed, maybe there's an opportunity to get the money back. Capital expenditures, again, maybe don't buy the new truck this year, look at deferring it, or wait until the end of the year when there's presumably going to be some really good deals as dealerships are looking to move vehicles out. So take advantage of those opportunities when they're available. On the accounts receivable side, I think that's always a struggle for a lot of small businesses or just any businesses in general. And you can look at some of those common techniques in order to speed up the recovery of accounts receivable. Maybe you have someone who's focusing part of their time on contacting businesses in a polite way to remind them that their balances are owing. Also, mitigating against costs of bankruptcies. I think having a conversation with those clients ahead of time that are struggling or not able to repay back balances, maybe you can find some other sort of negotiation between them to get something back and not go through the bankruptcy process. But you just want to identify those and factor them into your cash flow analysis. Incentivizing your customers to pay early by giving reductions in the total amount that's due could be another alternative. Ensuring also that your invoicing process is accurate and timely is very important. So the quicker that invoice is sent to the client once a work order has been completed or a job's been completed, the sooner the clock starts ticking and ideally the sooner that they'll pay you. So consider discounting terms for early payers. Also manage an approach to ensure that the timely collection is still preserving customer relationships. I do think that's really important to do, especially in this period of uncertainty, is that you will probably rely on those customers going forward. So it's not a time to alienate people. It's time for everyone on an accounts payable and an accounts receivable side to be flexible and to work with each other in order to preserve those long-term relationships. On the managing accounts payable side, so take advantage of terms when they're being offered. If you're not if you're not able to make a payment and you notice that the payable has been extended for a long time, if you receive a call from the supplier and they're asking for payment, probably not a good idea to just ignore them. Again, you want to preserve your relationship. I think a lot of people will be very understanding if you tell them, hey, cash flow has been really tight. What I'm going to try and do is pay you in 2 balances over the next 2 months. I really think that's important. I'm just being told that there's some time requirements, so I'll just go through really quickly. So work with suppliers to develop an arrangement that works for both sides. Take advantage of discounts when they're available to you if you have the cash flow. Manage your inventory. Maybe it's go to a just-in-time type system or to not make as big and large orders as you've previously been done, especially if sales are down. Balance managing cash flows to ensure sufficient stock of supply chain interruptions. Have a thorough analysis also of your inventory management policies. From business interruption insurance, just understand what your extent of the coverage is and work with your insurance broker to understand if you qualify for any claims on this. So whether it's an act of God, as the insurance company would say, or whether it's a government interruption, maybe some key definitions in determining whether you get some benefit from a business interruption policy, as well as that's an optional policy, so some people may not actually even have it. So understand those government programs, just refer to what we've been talking about before, and then financing. Ensure you're communicating with your financing partners to ensure that financing is available. I think if you have any lending requirements, or if you have ratios that you need to abide by, be proactive with your lender to say if you're having any issues ahead of time. I do think that that really is helpful to ensure preservation of relationships, and I do believe that everyone's being more flexible during this time. So hopefully I've wrapped that up, and I'll turn it over to any Q&A if we haven't gone too far over.
Thank you, Peter and Dana. So we're now going to do a very quick questions session. We've got 2 questions here. One is for Dana. Are all jobs job protected right now? What if you were having a performance issue?
So anybody that's on a leave right now, they are on a job protected leave. So anybody that's currently still working with the employer is still employed. So certainly you can manage their performance and just continue to follow your progressive discipline if you need to, and still continue to note performance concerns with that employee. That's very important now more than ever. And when I talked about grace, I just talked about, there's a lot of stuff going on at home. So just have kind of the grace in that period, but also let them know how they can improve on their work at work. So it's just the job protected leave is if they are on a leave. If they're working with you, they're still your employee. But if you are considering termination or anything like that while they're still working with you, you still should consult a lawyer, because there's going to be more mitigating factors with regards to what that severance might look like.
Great, thanks, Dana. And our second question is for Peter. If you took a CEBA loan but business is picked up again and you want to start issuing dividends, do you lose eligibility for the $10,000 forgivable portion?
No, you wouldn't lose any eligibility for the forgivable portion. The CEBA loan should just be used for those eligible, business expenses. You wouldn't be able to use the loan proceeds in order to pay the dividend. So just keep that in mind. The funds for the dividend would have to come from other areas of the business.
Great, thanks, Peter. So thank you to everyone who joined us today for our second session in our summer webinar series. We have 3 more sessions coming up in August. If you're unable to actually attend online, just register online and we will be sending you a recording afterwards. If you have any follow-up questions for today that we weren't able to answer, feel free to email marketing@rlb.ca and we will be sure to forward them to Dana and Peter. We will also be sending out a feedback survey. If you wouldn't mind taking 2 minutes to fill it out when we get it to your inboxes, we would really appreciate it, as we're always trying to improve the services we offer. Thanks again and have yourselves a wonderful day.